RIN TV coverage of the 2015 NAPSLO Convention is brought to you by the Lexington Insurance Company. We spoke with Wes Robinson about the state of the property insurance market during the recent NAPSLO Convention. He is National Property President at Risk Placement Services, and here he discusses market conditions, trends in NatCat risks, government involvement in insurance programs, and more. Here's what he had to say.
I would characterize the current property conditions in the surplus lines market as very soft, and it has been for a while, and I think if you ask anybody at this conference, they would agree with me. For the past several years, the property rates have been declining year over year over year. This past year, we've seen a significant decline, especially in the cat property world, primarily wind business. And I don't know if that's going to continue at the rate that it has been, but I suspect that it will, throughout the next quarter and into 2016, to continue to see sliding property rates for that. Besides tropical storms, there are several natural catastrophes that would be of concern to insurance carriers. All of them are of concern. Some are treated a little bit differently than others. A serious earthquake has not happened in a very long time in the state of California. Therefore, that market is very soft. Although I think something that keeps up carriers at night is the big one when it finally does hit, because it's going to be catastrophic. Having said all that, it doesn't happen every year. There's no season for an earthquake, so those rates continually decline year over year over year. Tornado is another one that carriers look at very closely, because that's almost like death by 1,000 cuts. It's not catastrophic to the point where it may put an insurance company out of business, but it can seriously adverse their results. Most importantly, I think flood is the most conservatively written peril besides just tropical storm. They are related. One causes another, often but not always. And so what you end up seeing from the surplus lines market is they will underwrite it. They will give you capacity for flood, but they tend to limit their line more so than they would wind, tornado, or earthquake insurance. Over the past several years, oddly enough, in the world of our government expansion, the involvement of the government in the state-run pools like Citizens, NFIP, the Mississippi Wind Pool, Texas Wind Pool, oddly they've retracted back from their involvement. Of course, they're still very involved, but these programs tend to ebb and flow in their size. Take Citizens, for example, down in Florida. The Florida Wind Pool has been on a very active track to depopulate their policy base, and they've done a very good job doing that. And in doing so, they've allowed the private market to come in, underwrite the business, properly price it, and we've actually picked up a lot of that business just in the state of Florida for that. Another good example of that is the Mississippi Wind Pool, where this year, this in 2015 and on, the commercial business, the large commercial business that in the state of Mississippi has always enjoyed a very inexpensive way to get some cheap wind insurance. And it has adversely affected the Mississippi Wind Pool's results because of that. So in order to get that in line, they've now eliminated and they've changed substantially how a commercial account is able to access the wind pool. Additionally, we're able to pick up some of that and price that accordingly. Texas Wind Pool also, on a commercial basis, has seen an average of 6% rate uptick. And on the one hand, that's what needs to happen. On the other hand, there's a coalition that are on behalf of the insurers that are trying to do everything they can to not let that happen. So you got a little bit of two sides going there. In general, though, I see more and more government involvement with them trying to push that to the private market. One of the key issues to the surplus lines market as we enter the end of 2015 into 2016 would depend on where you are in the chain in the industry, but most importantly, I think, is to maintain viability and profitability in a rate environment that is declining the way it is.
For more of our coverage of the 2015 NAPSLO Convention, visit the RIN TV On Demand Library.